Hey traders and investors, Todd Gordon, founder of TradingAnalysis.com. Welcome to the free video update. It's Thursday, October 15th, 2020, and it's kind of exciting. This is the first free video that I've done this year. If you know me, if you've seen me before, I used to do these all the time while I was running Trading Analysis, my business. If you don't, real quick, I've stepped away at the end of last year to join a large wealth management company. I was going to head up their digital and social media efforts to build out a book of business in the same way that I built Trading Analysis. Oh no. Oh no. Now I'm working home, studio in the basement. Hi, baby. Come here. Brody, will you? Oh boy. All right, come here. Hi. Okay. All right. Come here. Say hi. Okay. So we're going to get through this. So anyways, so yeah, good to be back. Hi, Brody. Will you take her, please? I'll show you. You can see I'm in the studio. All right. Say hi to the camera right there. Come over. See? He's got a brother who looks just like him. You're growing up. All right. Will you take her? Thanks, buddy. Bye, baby. Oh, God. You're so heavy. I know. Anyway, sorry about that. Okay, on point. I'm going to need locks on these doors. So we're back. And the idea here is I am in the process of founding, of launching the RIA. It's going to work side by side with Trading Analysis. Okay, so the idea is, if you want a short-term trade in the option strategies that we have recommended over the years, fine. Do so with a small percent of your capital, and then the rest should be professionally managed on much longer time frames. And that's the ideal mix, and that's what we've always recommended. So, to markets, busy time. We're less than 3 weeks to the election. And we're now in earnings season. We're getting the financials coming out here. We've saw some somewhat decent moves here in the financials so far. They've been an underperforming sector. So JP had a pretty decent move there. Morgan Stanley and Goldman had decent numbers. Morgan Stanley performed pretty well there. Goldman had a good report on increased trading activity with all the volatility, but stock didn't hang in there that well. So, if we look at the earnings that are going to come out, let's go over the next, let's go 10 days, and we'll sort by market cap right there. Here we go. Microsoft is going to be, we're coming out here in the next 2 weeks with all the large cap. So certainly interesting. And one thing that I do want to show you is today and recently we've seen some small cap strength. IWM was up 1% today, while the others were negative. So we're starting to see some small cap performance here. So if we just bring there we go. Let's maximize you. Let's go to the daily. So IWM is starting to let's go to a weekly. IWM is starting to threaten this uptrend. That's sort of a downtrend channel resistance line right around 166, and an otherwise very long uptrend. So small caps are starting to see some strength. And if we take a look at the sectors and industries within small caps, it was pretty wide ranging today. We saw financials, consumer discretionary, and industrials do well. So it's pretty broad based. That was interesting. We want to watch to see if that's a dynamic that'll continue with small caps. To the S&P, we're seeing similar green: financials, industrials, consumer discretionary, not so much in healthcare in the large caps, some pockets, but a lot of red in there as well. One chart that I do want to show you that Bennett Tyndall, who is running Trading Analysis day-to-day operations for me and was while I was gone, continues to be my right-hand man. He put this chart out here, which was super interesting. That is small caps in the November 16 cycle, presidential cycle. And you can see that November 2012, he shows here that we were in consolidation. We broke higher. Heading into the 16 election, consolidation, broke higher. Here we go again. Heading into the presidential election, up against trendline resistance. Are we going to break higher? certainly interesting here. So let's keep an eye on that. The other thing I want to talk about is I did CNBC today, and a lot of people are concerned about volatility that's going to happen, might happen around the elections. And I've got friends, family, even clients saying, Todd, should we go to cash? Should we really protect ahead of the election with any volatility? I mean, if the Democrats take the House and Senate, let's say there's a blue wave, is tech in trouble? Is possible regulation, antitrust going to derail the tech rally? And should we do something? From a financial planning point of view, and I've given the, sorry, that was so loud, slap down to a few of my friends. Like, look, if you're under 50 and you're continuing to work and you have a steady job, you do not try to sidestep any volatility with the election. In fact, you pray that we get a quarter, two, even a year or two of weakness where you can buy more shares, specifically in technologies. I'll show you in a second why. Buy more lower and forget about trying to time the market with the majority of your money, with your retirement assets. Okay, pray for lower prices so you can buy more, because in 10 or 20 years, I strongly believe that technology will be significantly higher than where we are. So if you're, just anything but pre-retirement or at retirement age, I don't even want to talk to you about trying to sidestep this. If you want a short-term trade with options and leverage with a small percent of your account, whether you're 40, 50, 60, 70, 80, or 30, whatever, okay, fine. But in terms of your longer-term money, if you're younger working, I don't even want to talk to you about trying to sidestep. You want lower prices. You want to be buying more. Longer term, guys, here's why I'm continuing to be bullish tech. And I think, it's funny where people say over the last 6 months or year, oh, tech is so overdone. It's gone too much. Guys, this is the Qs. This is the Nasdaq 100 since 1998. There's the tech bubble. Okay, that's the rally that we've seen in the QQQ. Down here is the Q to the SPY ratio. So as this chart's going higher, the first one is outperforming the second one. Said differently, the second one is underperforming the first one. Everyone's going crazy because this just happened. We just went on this rally here in technology. There is nothing new about technology rallying relative to the rest of the market. It's been happening since 2001. It's been happening for 19 years. And you're telling me this is all of a sudden a problem? This is not a problem. This is a good thing because the QSPY relative ratio just broke resistance. We just broke through resistance to new highs. This is telling you that we are in a tech rally. This is a different technological rally. These companies are making money, strong earnings. The problem is there's very few that are doing it. Brody, can you grab her, please? There's very few, which we'll talk about here in a second. There's few companies that are making money. That is a problem, and we're going to talk about it. But I don't think there's anything to be afraid of with a few mega cap tech companies. I'm going to be home for about 6 months. I gave up my other office. About 6 months through the winter down here. And then as the wealth management business is up and running, I'm getting office space again. All right, so here's another chart I want to show you. Again, this is the NASDAQ to the S&P. This is NDX 100 to S&P ratio. Look, 93 all the way up to 2000. NASDAQ outperformed the S&P. NASDAQ bubble came undone. Not surprisingly, S&P was relatively stronger than the NASDAQ here. But since 2001 and 2, it's just been rallying. Okay, so I see no reason to say this is a concern. Okay, now another thing I do want to talk about is, in terms of possible antitrust. All right, come here. You're gonna help me with this. Yes, I know. Okay, so look, I know. The only way the government is going to step in is if the end consumer, Eden, is being hurt. Okay, if mom and pops are being price gouged because of unfair competition, fine. Then they're gonna get in and break up large cap tech. But that's not happening. What's happening is, from a consumer and end consumer point of view, our lives are getting easier. The technology is allowing us to collect and get the goods and services and products that we demand easier. Delivery, especially in the middle of a global pandemic, is much easier for things, deliveries and electronics and everything to come to us. Prices, I think, are going down on that front because technological processes are displacing so many jobs that are otherwise higher paying. Those are the middle class jobs. So this is something called technological deflation that is actually dropping the prices for consumer goods, which is good for us. Okay, so the technology, large cap tech, is helping the end consumer from ease of collecting our goods and services and prices. What it's hurting is small businesses. Okay, small businesses are and medium-sized businesses are being hurt by the big cap tech, FANG, Facebook, Amazon, and Google. Not so much Netflix, but Facebook, Amazon, and Google. Because what's happening is it's harder for small businesses and medium to compete. For example, Facebook. You know, if you want to try to advertise, and I own a small business, I'm about to own a second small business. Actually, I own 3 small businesses with a distillery. If you want to try to advertise and compete against the big guys, those prices are very expensive. Google, try to buy your search term and try to compete on search with some large companies. Good luck. That's expensive, really expensive. Amazon, you know, they are certainly undercutting the prices and driving down prices for all competing businesses trying to get high placement on Amazon who make goods and services and widgets that we buy in Amazon. They're driving the prices down, which is good for us, but it hurts the producer. So again, it's the small businesses who are being hurt as much as the Democrats and Republicans love to pay lip service to, oh, we're all pro small business because that's a real engine of the economy. Yeah, right. The voters who are small businesses are very much in the minority, and it's the end consumer who Washington wants to talk to, and it's helping us. So I don't think there's any danger of breaking up of big cap tech because it's frankly helping the voters. Okay, so I'm continuing to be very bullish tech. I'll show you my portfolio. I haven't been able to do this in a long time because I was working for the company. So most of my positions are focused in tech. I'm 41. I have a much different timeline than, somebody who's 60 and 65. So this is not a recommended portfolio, but, I'm just sorting by net liquidation. This is how much the position's worth. XLK, QQQ, Apple, Netflix, consumer discretionary, AMD, Peloton, DocuSign, NVIDIA, Amazon, Facebook, Beyond, Gold, Lululemon, Visa, Microsoft, Twilio. And then there's another account, Lulu, Twilio, Q's, Apple. I mean, you can see where I'm at. This is a little Roth I have. I have some hedges on, and I'll talk about the hedges right now in the Qs. And this is something that I will be doing with the money management firm. I will be putting some option hedges on, and I'm already doing it for some people. So let's go to the chart. This is the Nasdaq 195. We had a really big gap up here in the 12th. This was a huge move up. That pretty much crushed the talk, in my opinion, of rotation out of tech into beaten down sectors like financials, industrials, healthcare, energy. That was just a gut-wrenching rally, which is great because I'm long tech. Made a ton of money that day for me. We set back, and I actually did put a little hedge on here in the 12th at the highs, and I'll show you that hedge. I'm probably going to take it off. I have expiration tomorrow on the 16th, so we'll see what happens. I think it's a wave 4 pullback. I think we do get wave 5 of 3 up in the NASDAQ to like 12.8. Probably a setback consolidation heading to the election, and then we get 5 of 5 and look down at the x-axis November 4th. So, we could rally into the election. That's the way I'm going to be playing it. But after that, I'm not showing you the higher wave labels. There is higher degree here. This isn't the end of the world as we know it, like the old REM song. There are higher degrees, but I think we do need to be cautious going into the election. I will be putting some option hedges on. So, Brody, please be nice to your sister. She's 2 years old. She doesn't know, buddy. You're the big boy. All right. Oh my God. So here's the hedge that I have on. I put it on the 12th. Here's view trades. 12th at 3:53. I put it on in the afternoon. So what I did is I did a unbalanced, it's actually a broken wing butterfly around 290. So I sold 20 at 290. 20 puts. I bought 10 at 293 and bought 10 at 288. We'll have classes in the future what that exactly means, but it's a downside hedge looking for the market to move down into the 290 level. Maybe I can overlay, instrument overlay. No, it doesn't want to work. I'll just pull up the cues here. So when the market was, this was the 12th when I put it on, I put it around 290. Market was like 297 in the cues, trying to get down to 290. We're there. So could be interesting. I'm on pin watch, and if you're an option trader, you know what that means. Like max potential profit, if we go up to 290, it'd be like $4,600. Max loss, if we rip higher, would be 1,000. And if we collapse, I'll make 920. Okay, so I'm going to try to manage that tomorrow around 290, see as much as we can get. But as I said, I'm very long technology. At 41, this is the way I want to be. This is the way I advise. We'll be short-term trading options as opportunities arise. I do these kind of option trades. But if you're younger and you're contributing, don't mess around this election. I think any weakness is a gift. All right, we're going to leave it there. Great to be back. And check us out at TradingAnalysis. Also, we do a Wednesday live stream, 8:45 Eastern time. My team puts a lot of work into the production, and it's a fun show. We get good viewership, participation, so check it out. A lot of information. And check us out at TradingAnalysis. Thumbs up on this video. If you don't mind, if you are on YouTube, throw a question, comment, insult, anything you like. Let YouTube know you're watching, and a little thumbs up if you don't mind on the YouTube window. Let the Google algorithm know that this small business is trying to compete with those big unfair technology companies. All right, guys, take care. Have a good night, and we'll see you on the next video update.